Good morning, everybody. It's been a great week and it's been success back to back. But I need to, there's a whole lot to talk about this morning to share with you. I hope I will be as fast as possible because before going into the outlook or what we're going to have or see next in the market, there is what I want to teach us for us to understand. We have been talking about the market structure and the wave pattern and all of that. And, I ask myself, why do people lose in this market? The reason why they lose is because they don't know the direction of the trade. And in as much as we are looking at this chart of AUD USD in front of you, and you think, oh, this part was an uptrend, this was a downtrend, this was another uptrend, it's another a downtrend. It's easy to see all of that, but between all those, this is a trend, for example, from here, which has not ended, and which I think is not ended. There is a whole lot of move between here and here for this to turn up and this down, and this thing that happened in here, which is a correction, and this move, and what is happening here again, which is a correction, and this move, and whatever that is unfolding here, which also appears to be a correction in the middle. These things you must understand. You must understand what is happening before you key into it. Otherwise, you'll be losing money. You can have a move like this, which has been going on since 2011 to the recent low that the price made about 9 years after. This was 2020, and the price now changed gear to get to this point in 2021, which is about a year or thereabouts. So you don't want to be locked in, because between here and here, it's huge. What you have there from 79 to 55, that is huge. It's a big move, and it's a correction, for example. So when you don't know what the price is doing on a bigger cycle, which is a bigger cycle like we are seeing now, then it will be difficult for you to predict what the price is going to do next. And the way you see it clearly here on a big cycle, you must be able to see it also on a smaller time frame. You must break it down to that level to understand. And I've said somewhere that price most of the time is not five-way. In most of the time, price runs in three waves. So you must know when you are seeing a five-wave structure. You also must know when you are seeing a three-wave structure for you to know what the price is doing. Unlike in stock market, most of the time you see five waves, both correctively, impulsively, five waves. But when in the Forex, commodity and all of that, you don't tend to see five waves most of the time. In fact, most of the time it's three-wave structure that you will see. But along that structure, of course, there are points that you see your five waves, and you must be able to count your five waves. But also, you're not oblivious of what the price is doing. Now, not knowing what the price is doing, where the price is, the next bus stop is what makes people lose. And you don't want to commit your fund when you're not sure of where you are going and where you are turning. So it's very important. Even though I've been mentoring you for quite a while now, and at what point that something has shifted in this group to we are being more precise in terms of direction. Even when we know this is direction, of course, we still have to use the knowledge that we know to know, okay, at what point do we expect a change of pattern or a temporary change of direction for us to take advantage of the market. Whatever the fundamental news is saying and all that is saying, the structure will always prevail. So what the fundamentals and news does is to complete the structure eventually. That is what they do. And so it's like that. I don't want to waste more time. So not knowing the direction of the trade or the market, it was make people lose in this market, and pretty much like that. So now we need to see what is happening here. And I've told us also about structure and about the direction of the market or of the trade, and when we are doing something like this. So we must understand all of that. So like now, if you look at this area, you will find out, okay, for instance, I've talked about price action several times. Price action, what we are seeing, just give me like a minute, please. Sorry for that interruption. I quickly have to address something. So now I've talked about price action and how we use price action to know what is happening. Of course, you must also understand the structure before you know where to. So in between here, the resistance here and the support here, if you see, let me bring those things. So the resistance here and the support here. So this pretty much tells you probably price is still going to go more down, but what we saw, it's a correction and that continues. So you must know when it's consolidating in a range, and when you are seeing price action, you must know how to interpret it in a range of consolidation, because it meant nothing really. Being this an engulfing candle does not say anything. Even it's an engulfing candle and it's engulfed this one, you must know what it's happening. Then this one, also pretty much you can see that the bit of this candle, it's down and the tail is up, is because it is in a correction. If it has been opposite other way around, it's a bearish sign. So nothing here. So this one also, not until we have a break out of here, because this had been a correction, this move, and this candle, particular candle, also has been in a corrective mode. Really, it has been in a corrective mode. But a breakout of it still tell you that this price is in a corrective mode, but for how long? You see, and it went on and on for a long time in that corrective mode, going up. That is what we saw here. That is what we saw here in a corrective mode. So I have to douse the, sorry, I have to douse the noise. Yeah. Within that correction, see what the price had done. Price had broken that low. So price will not say, okay, because this is the lowest I've made, and I'll be using and I'll be respecting the low and not break. It broke through it once, and that's all. Price broke through it once, so it's not what you think. And seeing this price action too, I don't see anything that tells me from here that the price is going down. That is one thing I wanted to see. I can't see anything telling me that the price is going down. So on, this is AUD USD monthly time frame. So now what we are seeing here is the price had been going down. The price had been going down. And when the price is going to be done, do we know? Maybe we don't know. And if I want to bring a trend line, I can just connect the top of this to this, and that will be pretty much, bearish, which I don't know when it's going to stop. When I do that, I don't know when it's going to stop. You can see it's a very bearish mode, which I don't know when it's going to stop. So before price comes up here and break this, it's going to take a while. It's going to take a while. But where I need to begin to now teach you is what we are seeing here. What we are seeing here. On this time frame, which is a cycle, this cycle pretty much tells me this is a wave 1 and a wave 2 correction. So that is what that tells me, a wave 1 and wave 2 correction. So if I bring this one on a bigger time frame now, it's like I'm doing what I don't want to do. This is a cycle. I'm trying to break down this cycle for you. Okay, I'm trying to break down that cycle for you now. This is a cycle. I'm now going inside of a cycle of this to see what we are seeing on the cycle of this. That's a cycle. That's a cycle mode. That's a cycle mode. That is a cycle mode. So where we are, that's a pretty much a wave 1. And a wave 2 in that area. Okay, so if you look at it, that's a wave 1 and that's a wave 2. Then we start a wave 3 here. So within a wave 3 itself, we connect these and we bring it down. We connect, we bring this one down. This is the internal structure of wave 3 that we are seeing. Okay, this is the internal structure of wave 3 that we are seeing. So which tells me that this is a 3 and a 2 of a 3 here, and a 3, 3, and this is the 4 of a 3. This is the 4th of a 3 that we are seeing. That's what it's looking like to me, the 4th of a 3, and just teaching you how the trend line will help us know when a wave has finished. The internal structure of this wave has finished in itself to give me a 3 and a 4 of a 3 when this thing broke out of here. Do you understand? And so with this pretty much means the beginning of a big 4. For me, a big 4 of a 3. And this may now sound okay. Are we dealing with what? The end of wave 3 here. So this has broken out of immediate 3. And when it happens like that, then you are now weary because it has broken out of immediate 3. So, but still it's going on correctively after this low here. So I don't need this one. So let me just use this. So after this low here, price broke out of here. So then you now begin to ask yourself, are we done with 3? Are we done with 3 here, or we are done with 3 here? So that is the question you'll be asking yourself. A 1, a 2, which falls in place, and a 3, and a break out of this structure. Are we done with 3? Is this a major 4 that we are seeing? If it's a major 4, how is it a major 4? Then what we can do is, let's do this. This has been the limit of this. If this is a major 4 that has finished, where is this? So let's bring our instrument to see the move that we had to the downside and see what that move is. This move is more than 1.68. So because it's more than 1.68, this is not a major 4. This is still the part of a 3. It's not a major 4. If it's a major 4, price will not break low of 1.618. Price will not break low of 1.618. So it has broken low of 1.618. That still tells me this most potentially is the last 5 of 3. So which means that my trend is going to still come this way. So my trend is going to come because they have an extension here. Now, this is now the last part of 3. This one is 3, 3, 3, 4, and the last part of 3. So we are now seeing a 4th correction. That is what I can see from here. So if I'm going to now relabel this, let me help us by using a bigger cycle notation to say this is a 1. And this is a 2. A 3. A 4. And a 5. So this pretty much is running in a 5-wave format. That is the way the cycle that the configuration looks like. So for me, this is a 3 in the cycle. So we are doing a 4th here. And this is a 2 in that cycle. And this is a 1. So we must understand when you see the bigger cycle, it now becomes much easier for you to relate. This is not where to go now. The price is far, far away from that. So let me change this to this. Good. So we now know this is a break out of this is 3-3, and this is a 3-1, a 3-2, a 3-3, a 3-4, and which is inside of that 3, and a 3-5. Then we are now seeing a 4th correction. So for us to know the limit of this 4th correction, what do we do normally? This is where we come to by coming here to pick from the 2 to where we think the 3 is. And we know that if it is 3, these are the areas we expect that price will not go through. So let me be using blue now. I will use blue. So This tells me this is 338, and I don't expect price to go beyond a 50 to make it a 4. That's pretty much the last place that a 3 can be. I mean, a 4 can be. So this is where we think price will not go beyond. That's where price will not go beyond for a 4. Now, but we saw a reaction at this level now. We saw a reaction at this level. This may well be the end of that 4. So it could be anything between 38, but not more than 50, where we saw the red. And of course, it still agrees with what we know about wave, because it's not in the vicinity of a 1. The 4th is not in the vicinity of a 1 in the bigger cycle. So that is what we are seeing. And is this the end of a trend? No, it didn't show itself to me as the end of a trend. Why? Because it has gone up in a 3-wave format. This is a 1 and a 2 and a 3-wave format. So this is giving me like a flat. So in this a flat, even though it is a 3-wave structure, the first one went up like a 5-wave structure here. And by the time you look at it, it can be a 5-wave structure, a 3-wave in the middle, and another 5-wave in this place, which might look like a zigzag, but really it's a 3-wave structure that you saw. So in seeing that this is the end of this structure, we can connect from here to here on the bigger cycle to see that that structure has ended, and we can term that as the A of the 4th. In terming that as the A of the 4, let's do this. It is the A of the 4th. So most likely the A of the 4th. So this to me might end up being a flat, and we are going for a B of the 4th. So if you're going to go for a B of the 4th, and that is what we are doing at the moment, a B of the 4th. Okay, let me do something. Let me use black for something that donates the cycle. Let me use black. And let me use red for this one, because we are done with it. Then the next wave now is this one, which we are doing on AUD USD. This is the next wave that we are doing. So, and I'm going to limit myself to this wave. Let me use this. Good. Even with what we know of the last wave, assuming this is what the last wave looks like, we're going to use the 4th to plot where it's going to be. This is 4 here, and this is 3 here. So we expect it to be between 123 and 116, 1.68. So it means that the inverse of that now is this, which is a 1.618, which is here, and a 123, which is here, which is reasonable enough for anybody. So this is where you would expect that the 5th wave should terminate. Which is not now. That is where you expect a fifth wave to terminate, which is not now. Which is not now at all. So it may mean that we can have this leg wrong to break this low or not. We might still have a leg, the last leg going up before we now finish the structure this way. So we'll continue to see how this one unfolds. But from what we can see, is still a correction here. This is not an impulse to the upside. This is a correction here that we have seen. And it's a correction on the higher time frame. Now, we are going to see how to deal with this structure here. So let me now begin to how to use. We are seeing the cycle, that we are still within the cycle, and something tells us we are not done with the cycle. That is what we are saying. Now, dealing with this structure that we are seeing unfolding, what do we expect? At least we expect, at least for a B, a 50 or a 61 being the minimum retracement. Even if it's going to push higher up, we expect it to be at least a 50 or a 61.8 for a B. And if that is the case, we are saying that, okay, we are looking for a zigzag move to the upside that is going to break up here. But that may not be, because once it breaks above here, 4 is violated, then it is not what we think anymore. So these are ways of actually looking at wave and how to deal with it. So because the trend is downside to the downside, we still expect this thing to go more down. That's what I'm saying. If it goes more down and does not break this low, then we expect it maybe once it's still between 61 to 85, it could potentially still be a zigzag to the upside. Or if it runs to 19, let's say a 90 of this retracement, a regular flat, if it breaks it to low, then to 123, it could be a running flat. In that case, if this is going to be 3 and this is going to be 4, then a running flat will suit this wave. A running flat will suit this wave, whereby the last leg of C will not overshoot or overrun this place or not overrun this area. That is what can happen. Of course, if it runs below, because it's still part of wave 3, going to 4, because it's doing a 4th wave correction, it can change where 50 and 38 is going to be. That is what will now happen, because we are going to use the low to plot your 38 and a 50. This is the low we had now, and we have to get this between here and this blue. But then you know for sure that all that, no, between here, this is a 38 here and this 50 here. But all that can change once this one breaks low. So you're not going to use that low to plot from here to that 2 again to know where it's going to be. So that is the way it works. Now we're going to now pay attention to this, what we are seeing here. That is where we're going to pay attention. So let me quickly go to the weekly time frame. Now this is the weekly time frame. So it's changing in your eye now. This is the weekly time frame. The weekly time frame is coming down correctively in a wicked way. So when you see that so when you see that you want to kind of still do this. Okay, this one pushed before a bit up. Okay, So 4 and most likely be A. Now dealing with this, dealing with this also is coming, though collectively, like a five-way structure. Though collectively like a five-way structure. I don't know if you can see that, but in a collective format. And that's why it's not like not like it. This one went up like a three-way impulse, where you have a 1 and a 2 and a 3, and this is the flat in the middle. This is an impulse, a five-way structure impulse, then the flat in the middle, and another five-way to end it. So then eventually, it's not an equal length. This one to this place is not equal to this one to this place. No, it's truncated. So you must see. You must see. But what will now guide you? Because if you are using an equal leg of a thing, and you do, oh, this one is doing, you do this, and it's going to be an 100. So what would guide you is the larger time frame cycle count that will guide you that they are going to truncate it somehow. So that is what will guide you. This is weekly. This is weekly. Understanding how to deal with this in the weekly format now is, this is where a 38 is, which price didn't really respect, and broke beyond it. So, and for this correction of a B, so that is a 1 here, and let me now see, let's begin to see, let me change the color here for the internal structure of that to something like this. Yeah. So for the internal structure of that to something like that. So that is where a 2 will now be. That is where a 2 will now be. So a 1 and a 2 of that will be. So then we now begin to have a 3. So a 3 from here this thing is still running because it's a flat, and that is one thing you must know of a flat. Sorry, of a correction. When it's a correction and it's a correction that is kind of running like a 5-wave, you can see an encroachment of a 4 to a 1 like this. They do it. So the motive in a motive wave, they will not overlap. But when it's coming down collectively, they can overlap. You must know that. So this to me, it's like still we are correcting, most likely this still look more like the part of a 2 of a 3-3. So we are still, to me, we are still doing a 3, and it's like a 3 has not ended for this particular wave here. It looks so much like a 3, may just be at this level. This is a 3 at this level, and this is like a 2 of it. So it's pretty much a very wicked structure where we have this. Then we now see the correction in the middle here, which is also a flat structure, from here, which is an A and a B and a C structure. To finish this correction in the middle, after this 3-3 and probably we now see another impulse going down. So this is the new impulse going down now. So, and we're going to be seeing the inside of this new impulse going down. This is the new impulse going down now. So, and it's kind of also going down collectively also, like an impulse. So this may be a 5. So the new structure now, from up here to where we are at the moment, that's a new structure now. That is a new structure now. That is a new structure now. So this one looks like a 1. And a 2. That's the inside of 1. Then probably a 3. And a 4. And probably we are correcting a 5. Probably we are correcting a 5. Whatever it is, we'll see if it's a 5 we are correcting or it's not a 5 that we are correcting. So, and it may change the whole of what we are seeing here. This cycle, it may change it. With this way, this one is going to come down. You may change it. Once it corrects between 61.8 to 85, it might just be a wave 2 to the upside. That is what, because the correction is rather too sluggish. It may just be a wave 2, and which means that this might just mark 5 of the cycle, and we are doing a 1 and a wave 2. That's how to think, really. That's how to think, really, because the way this one is coming down, it's not coming down so far as a B structure, and we need to see that. So now, if it's going to be a wave 5 that we are seeing here, it's going to be a wave 5 that we are seeing here, and I will now use this for the inside of 5. It's going to be a wave 5 that I'm seeing there, which means I will be changing this one because I'm inside of what I think is the last wave, and inside of what I think is the last wave, from here to here. Okay, let me still use this. Let me still use this. Okay, let me change this for the inside of that structure. So where do I expect this one to stop? If it's 3 to 5, I mean 3 to 4, 3 to 4 should play in between 123, which is where the price had touched here for this green, 123 to 161.8. So which is here. That is where I expect it to store. That is where I expect it to store. So a move between here and here between here and here is what we see us going for more upside. And if we should break beyond here, then we now know that it is not a B. It could still be a B. If we break lower, then it won't be what we thought. We'll start counting. But if it does not break beyond here and it turns to the upside and break this structure to the upside, then can this one be potentially a 2 from here? Let's see. Can it be a 2 from here? Yeah, you can still go for a 2 because that will be very close to 61.8 retracement of this one. So it can be a 2 with 2 to the upside before it begins to go to the upside. But from what we know, this is the limit of where we should expect more upside based on the kind of correction that this one is doing. Based on the kind of correction that this one is doing. So these are probability and possibilities that we are seeing in this market. So this one is a 3, and we are correcting the inside of 4. The inside of 5 now. This is like a 5-1, a 5-2, and after a 5-2, so we start the 3. So 3-1 of that structure and a 3-2 of that structure. So we expect it to turn down to finish a 3-3. So with what we know of price, let me go inside of this. I think I'm helping you. This is AUD USD.